Salutations. This is Brian Jarris from Ville Wealth Management. In today's video, we're going to talk about a retirement hack withdrawal strategy. So for those of you between the ages of 55 and 59 and a half, did you know you could pull funds from your 401k and 403b retirement accounts penalty-free utilizing a very lesser known Rule of 55? Now, today's video is meant to be educational in nature only, so if you need customized personal advice, please reach out to me at villewealth.com. Now, for those of you entering your 50s, I wanted to take a moment to talk about an intriguing and potentially beneficial strategy I personally recently took advantage of, known as the Rule of 55. Now, most of you are probably aware that if you pull money from your retirement accounts before the age of 59 and a half, you'll typically face an early withdrawal penalty of 10%, in addition to the possibility of income taxes on that amount as well. Now, most likely, people will not take that early withdrawal because of that penalty. However, there are a number of exceptions in addition to the Rule of 55 that I'll cover briefly at the end of this video. So how does it work? In the year you turn 55 or later, if you leave your job, you can withdraw funds from your 401k or 403b penalty-free. It's important to consider this strategy in your financial planning if you have an employer-sponsored plan. Make sure that you are reviewing your summary plan description to see if this strategy is permitted. Some plans may not permit it. Now, if your plan does permit this strategy, you can pull money from your retirement accounts penalty-free even if you take a new job. Certain jobs like police officers and firefighters can take advantage of this rule as early as age 50. Now, there are some plans like traditional IRAs that do not permit this rule to apply. So if you have the 401k, you can't roll it to an IRA and still take advantage of it. Again, IRAs would not qualify. So you must have an employer-sponsored plan from your existing employer for it to qualify. Now, if you don't have a lot of funds in your existing 401k plan, but you have an outside rollover IRA, if you know you're going to leave your job, you could roll over that IRA into your 401k plan to have more assets in there to take advantage of this Rule of 55. So why would someone consider a Rule of 55 withdrawal? Well, as a financial planner, I'm typically telling clients not to pull money out of the retirement accounts ahead of time. But there are a few exceptions. Here's a couple. Maybe the client is going to be unemployed for a period of time and they need the funds. Maybe they want to start their own business. Maybe they have large retirement accounts that by the time they get in later into life, their required minimum distributions are going to be so large, it's going to push them into the highest tax brackets. So getting that money out now at potentially lower tax brackets can make a lot of sense. So what do you do if your plan does not permit the Rule of 55? Let's go over an example. I recently left my employer, just turned 55, and I had about $250,000 in my 401k plan. I wanted to withdraw $50,000 to start a business, but my plan would not permit the Rule of 55. So what I did is I did a workaround, a retirement hack. I rolled over $200,000 of the account to a rollover IRA, and I took a direct distribution of the $50,000. I did not have to pay the 10% penalty, and because I'm currently in a lower tax bracket starting a new business, I'm not going to be paying a lot of taxes there. So again, what I was trying to do was pull money out now, reduce my overall retirement accounts, because later in life, my required minimum distributions are going to push me into the higher tax brackets. So it worked out to be a really good strategy for me. Now, please consult your tax advisor before you implement any type of tax strategy, as your individual situation could be different. So let's go over some of the nerdy detail behind the scenes of what we should be looking out for. I apologize, I'm going to read this because I want to make sure I get this right. So your 401k provider should fill in box 7 on Form 1099-R with Code 2. Tax programs like TurboTax and the IRS recognize Code 2 as meaning there is no penalty for early distribution. So if your provider uses Code 1 instead, don't worry, you can still file Form 5329 Part 1 and claim a code 01 exception to avoid that penalty on line 2. Next, I'd like to cover some of the exceptions in addition to the Rule of 55 to the 10% early withdrawal penalty. So what I've done is I created a table. The left-hand column would represent the exceptions, and then we have 3 columns. Column 1, this exception applies not only to qualified plans, but also to traditional IRAs. Column 2 only applies to qualified plans like 401ks and 403bs. Column 3 only applies to traditional IRAs. So we have everything here from 401k loans, birth or adoption, all the way down to substantially equal periodic payments known as SEPs. So our last topic that I want to talk about today is withdrawals after 59.5. Are there any rules there? Well, if you're in a traditional IRA, you can pull money out pretty much for any reason. No penalties are going to apply, no restrictions are going to apply. However, if you're still involved with an employer-sponsored plan, like a 401k, 403b, you're still working for that company, there may be some restrictions, but there usually are 2 hacks to kind of get some money out of there as you're still working there. Number 1 would be an in-service withdrawal. This lets you pull money out of your 401k, 403b without paying a penalty. You're still going to pay taxes. About 70% of the plans currently offer in-service withdrawals. The other option is to do what they call an in-service rollover. So you could roll over existing assets from your 401k or 403b to an IRA, and then you would be subject to the IRA rules, which are a lot more lenient. So this has been a video from Vil Wealth Management. I'm Brian Jarris, CFP. If you need to get a hold of us, you can reach us at vilwealth.com. Thank you for attending and have a great day.